Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Monday, March 18, 2013. Thank you all for tuning in. There's a lot to cover. Let's jump right into the charts. We're going to start off with the usual S&P 500 E-mini futures. You'll see that we are using the M contract today, which means the month of June expiration. The futures are down about 13 points at the moment to 1540.5. Pretty solid decline. The markets are off the worst levels, though, which was really just below the 1530 level around 2:30 in the morning. So they have rebounded up a little bit. So that is worth noting. But overall, still a pretty solid, sizable decline today. It looks like the country Cyprus, which is a small country, little island country off of Europe, is actually going to look for a bailout today. So it looks like they're going to take tax depositors in Cyprus banks, and they're going to take part of their money to cover a big portion of the tax. I think deposits on over $100,000, you're going to get about a 6 or 7% tax. Anybody with over $100,000 in the bank will get a 12% tax. So that looks to be what's happening here. It looks like the European Union is going to try to give Cyprus a $10 billion bailout. Now, this is a tiny, tiny country that's causing all of this morning chaos today, but just think about it for a minute. It just doesn't stop. It's been Greece, now it's Cyprus. The Italian bond markets are in disarray. The Spanish markets are in disarray. It's just happening all over the globe. So today you have the German DAX down about 1% on the news, which is not a horror show, but it's early in the day. You have France, which is the CAC 40, down about 1.2%. Italy is down about 2%. And Spain is down about 2%. So this is just showing you how the problems are starting to brew in the European Union. Now, if you take a look over at the English market and look at the London exchange, you're going to see that the FTSE 100 is only down 0.7%. But either way you slice it or dice it, there's just a lot of negative news coming out about this. The European Union was supposed to be supposedly fixed already. And now you're seeing that the country of Cyprus needs a bailout immediately. So I think this is, just part of the puzzle, part of what's going on there. And I think traders need to be a little bit on guard. So right now, most people are thinking this is not such a big threat to the rally in the United States, maybe just a little pullback. But I have to beg to differ here. I think this is something that could turn out to be a bigger event than most people are looking at, not because of Cyprus, but simply because it could just become, the normal domino effect that comes across Europe, and that will hurt all markets. So this morning, take a look at Deutsche Bank, which is probably the most important European bank. You'll see that with a pretty sizable gap down. That stock on Friday closed at 44.63. Today it's trading at 42.69 this morning before the opening bell. So there are a lot of problems out there. Watch the European bank stocks. They're going to be the weak stocks this morning before the opening bell. I guess they're also susceptible to falling a little bit later as well if the major market indexes do so. So I think that's what traders should be watching, at least very, very closely, because this is just something that really came out of left field. Not for most traders. Most traders knew Europe would erupt again, but the reaction to such to Cyprus's bailout. It's such a small country, but it's having such a big domino effect in Europe. Couple of other things to talk about real quick. Gold. Gold is catching a bid. More of a safe haven than anything else. People are saying, hey, is my money safe? We do run a fiat currency system, so is that worthwhile? And you're seeing a little safe haven money going into gold. Gold now, GLD trading up to 155.50. It did close at 154. So you see a decent pop in the GLD. Spot gold is up, I believe, $10 today to $1,603 an ounce. Decent move there. Now let's take a look at oil. Oil is down. Obviously, the dollar is strong. The U.S. dollar index is strong. Light sweet crude is down $1.05, down $1.05 right now to $92.40 an ounce. Let's take a look at the USO. You'll see the USO staging a pretty decent gap down. Looks like USO closed at 33.60. And today it's trading at 33.25. So reflecting a nice little move lower in oil. And again, if the dollar is strong, oil will be weaker. Let's take a look at the U.S. dollar index real quick. You'll see that the dollar has definitely come off of its best levels, same as the market came off of its worst levels. So here when the dollar pulls back, we're getting right back to that inverse relationship that we're accustomed to seeing for the past 12 years. So again, dollar moving down, markets are coming off the lows. But if that dollar catches a bid back up there, expect these stock markets to come back down. It's pretty much that simple. I would use the dollar as an inverse barometer today. I know that the dollar and the market have been trading, or the S&P 500 have been trading higher recently together, but that may not be the case today because you do have the European Black Swan event taking place. There is some more news out here, so let me just go through that real quick. I do believe we're going to have some housing news out at 10 o'clock this morning, so traders want to watch a little bit for that. That's really going to be the big news economically. Other than that, everything will be about the Cyprus markets, and we'll see if these central bankers can put the pieces of the puzzle back together again, or will it stem and turn into more of a little bit more fear out here for the marketplace. But either way you slice it or dice it, not a pretty good day to start on a Monday. Let's take a look at the Asian markets, real quickly. Now, last night the Nikkei 225 index sold off by 2.7%. What does that tell us? Tell us to watch for the Japanese ADRs. They could be very, very weak today. You also have the Shanghai index, which is China, down about 1.7%. India, or the Bombay Sensex index, was down about 0.7%. Singapore was down 0.9%. The Hang Seng was down 2%. But either way you slice it or dice it, watch for weakness in the Japanese ADRs. Okay, stocks like Toyota Motor, which have been major winners as of late, could be very, very due for a pullback today. This is where I think the weakness is going to be. Watch stocks like Canon, CAJ, Panasonic Corp, PC. Also going to watch Sony, SNE. These are all stocks that are very, very susceptible to declines today, at least at the start of the trading session. But again, Japan was down 2.7% last night. The Nikkei 225, that is. That's definitely going to affect the Japanese ADRs this morning here in the United States. It is also going to affect a lot of market leaders. So, again, there'll be a trickle-down effect to there because the Japanese market has been so inflated as of late. But this is not a pretty picture today, and I think traders should be on guard for weakness in all of the Japanese-related equities. You could also watch the EWJ. That should be under pressure as well. Today it's just down slightly, but that could go down further. All right, with that said, everybody, I just want to wish you all a great trading day, and I will see you on the charts a little bit later. Enjoy the day.